Hello guys, yeah, welcome once more to Just the Chat. I'm Fearless. On today's video, a lot of persons always get it confused when it comes to exiting of trade. On actually, when is the best point? When is the best place to take your profit? When is the best point? Where is the best area to exit a trade? Either following your strategy or just trading rapidly. Even on all market, this can happen. This is applicable on all market, on this forex market, synthetic market, and on the crypto market. You can use this pattern to exit any trade you are into, either swing trade, day trade, or as a scalper. Okay, so yeah, I'm going to be educating you on five professional ways of exiting trade. Five professional ways of what? Of exiting trade. Five simple professional ways you can exit a trade. First, it is what? The first way to exit a trade, it is with support and resistance. What do I mean? I mean support and resistance. If you don't understand, let me just give you a little explanation of what support and resistance mean. A support zone is a zone where price gets to and it bounces back for a buy. A support zone is used for buying, while a resistance zone is always at the top. Okay, for example, like you can see my chart here. This is let me bring out my brush. Not this. Brush. This is my brush. This point here you are seeing, this top here, this is a resistance point. Are you seeing this? This is a resistance point. This is a resistance point. This is a resistance point. Here again, this is a resistance point. This is a resistance point here. Are you seeing this? Yeah, this is another. This is a resistance point here. This is a resistance point. This is a resistance point. Are you seeing this? This is a resistance point. This is a resistance point. Resistance point are points where price gets to and they bounce back and they reverse back for sell. Let's say you're on the sell trade or you're on the sell market, then a price bounces back and hit a price drags up, hit a particular zone and reverses back. Then a support zone is a zone where price gets to and reverses back for reward for the buy. For example, what do I mean by a support zone? Just hold on. What do I mean by a support zone? A support zone is this. An example of a support zone is this. This is a support zone here. Are you seeing this? This is a support zone. Here is a support zone. Support zone are at the down. Support. This is support zone. Support zone. So what do I mean when I say the best for one of the best ways or one of the professional ways to exit a trade is a support and resistance zone? Let's take for example you're on a set trend. Let's take for example you're on a set trend. The best points or the best place to exit a trade on a set trend is what is is a resistance zone. Let's say you enter this trade because I'm a trader of I love price reversing back. I love retracement. I enter most of my trade on retracement. I always wait for retracement to occur, then I follow the trend. I always follow the trend on retracement. Okay, let's say, are you seeing this market now? This market has been selling down for over a long time now, and as you can see, it gets to a particular point, it reverses up, gets to a particular point, it reverses up. So what is the best point? Let's say you take a sell at this point. Where is the best point to exit a trade? Let us zoom out like this. Okay, let us zoom. Are you seeing it now? Okay, let me zoom out a little. Okay, hold on. Okay, so are you seeing this? Let's say you take a trade, a sell at this point now. Where is the best point to exit this trade? The best point to exit a trade as this is what is a support zone. Here is a support zone. Are you seeing this point? Here is a support zone. This is the best point to exit a trade. Let's say from here you take a trade here. You can place your take profit here. Your take profit here. So when price gets here, you can see it breaks down, then it drags back to retest here back again. Are you seeing it? Then price drags down. Let's say it dragged up again, then you take another trade at this point. Where should be your take profit? Your take profit should be what? The next support. This is another support here. The reason why we take profit the reason why you should be taking profit at this support is that price might get there and decide to reverse back. So you don't want to be in such situation. So when price just get there, it should just hit you out and watch the market to take other best opportunity. For example, now this is an example. The price drags up, it gets here. Then what? Your take profit should be here. Let me zoom in. Okay, let me zoom in for you so you can see it clearly. Okay, here was I explaining just okay. This is it. Price gets a gave you this reversal candle here. You enter your trade, your take profit should be here. Are you seeing market hits here and it reverses back above your entry point? So if you had put your take profit here, when you get here, it will hit you at. Then when price gets here again, give us another set opportunity. You go in, just imagine this in this zone you took two trades and they were all profitable. Are you get it? So for let's say if this is for a set trend, let's say for a buy trend, what do? You take your profit at a resistance zone. This market has been buying. Are you seeing it? So it drags down. Let's say you take a buy here, your take profit should be here. Your take profit should be here. This is a resistance zone. This is the resistance zone. So I seen price get a break above your resistance zone, then drags back for retest. So putting your take profit here always give fast mind and control your emotions. Okay, price drags down again. Let's say this one is kind of too small, but you can also, if you, let's say you have to take this trade from here, your take profit should be here. Your take profit should be here. Let's say price drags down to this point. Where should be your take profit? Your take profit should be this point at this top here. This is a what? This is a resistance zone. You get it. So when you follow this pattern like this, just follow the support and resistance for trades, for taking your take profits, for your take profit zone, and for exit point. You see, to save you a lot. And then the other pattern of exiting your trade. Okay, the other way you can exit a trade is using what? A trailing stop loss. Note it down. A trailing stop loss. A trailing stop loss is very, very, very cheap and easy to understand. Or some people they call it locking of profit, locking of your profit. That's what some people call it, but it's called trailing stop loss. Trailing your stop loss. Let's say for example, now this is it. Let's use this for example again. Let's say for example you are currently on this same market. Let's say you took your trade at let's use, okay, this is a reverse double top. But let's say you took a trade here, you took a set trade at this top here, then the market drags down. You don't want to take your profit at this what? At this support here. So you are like, okay, even this, let's say you take the trade here, or you take it, let me zoom in so that you get my understanding. Yeah, you get this explanation. Okay, just hold on. Okay, good one. This is a second, this is a bearish engulfing, this particular bearish engulfing at the top. Let's say you sold here, then the market drags down and gave you what? This very massive candle. Then you are like, okay, this trade you want to ride it, since you know it's a sell market. Then your entry is this point here, your entry is this point. Then what you now do is you now put your stop loss, set your stop loss below your entry. What does it simply mean? You can actually do it. You are setting your stop loss. You are not put It's not take profit. Now this is not take profit. You are setting your stop loss. You go back and modify your stop loss and let's say for example you took the trade at the 2552.7035. Then the market drags below it and breaks down to this point, this candle close. Then you put your stop loss at 2546.8864. That, what does it simply mean? If market drags back here, the market should take you at what? In profit. It's not taking you at in loss. You are setting stop loss, but it is taking you at what? In profit, because the entry is below your the price is below your entry. You can see how market drags down. The price never got back to here. So sometimes trading stop loss helps you ride the trend. So let's use it on a professional way now. How you can use it to exit your trade. For example, you took a trade at this point, you sold at this point, then you are like, okay, price broke below here, then it drags back here, then it tries to set down again. Then what did you now do? You put your stop loss at this point. Remember, you entered from here, your stop loss is not here. This is what is called trailing stop loss. Your profit has been locked. What does it simply mean? It simply means if price for any reason decide to do some retracement that gets here, or gives you, or let's say the market is about to reverse, then the market gets here, it will hit you out in profit. Either you are online or you're not online. That's what it simply means. As you can see, the price drags down. It comes back here, drags down again. Are you seeing it? It comes back up without getting here. Then when you see this massive movement again, what should be your next move? Your next move should be, okay, I want to put my trailing stop loss here. You trade your stop loss at this point, putting your stop loss here. Then are you seeing that our price drags down, went up again? Are you seeing it? So okay, you're not like, okay, I want to put my stop loss at this point. Your stop loss will not be here. So price, are you seeing how price drags down? Your trailing stop loss is not here, and you enter this trade at this point. Are you seeing a lot of profit you have made? Are you seeing it? Just for trailing stop loss, just for locking your profit. It helps you most times to ride a trend. Then you're not like, okay, if price for any reason gets here, the market will hit me at. Are you seeing how price has now broken above here? So this is where you would have gone out of the market, because now the price has broken above this resistance point. Are you seeing it? It has broken above the resistance point. So you are not out of the market. So most times when you trade your stop loss, it helps you minimize your risk, first of all. Secondly, it helps you remain profitable. And thirdly, what it helps you do, it helps you control your psychology. So this is another perfect way of exiting a trade. Okay. So the third way of you can exit a trade. Okay, the third way the third best professional way you can exit your trade is using swing high and swing low. Swing what? Swing high and swing low. What do I mean by swing high and swing low? It's very, very cheap and easy to understand. Currently, as you are currently seeing this chart, what do I mean by swing high and swing low? Let me give you a clear example of of swing high and swing low. Swing high and swing low is just like support, your support and resistance. So support and resistance, but this one is quite different from your support and resistance. Let me give you a clear example. Okay, good one here. Okay, as I currently say, this point here is a swing high. This that was newly formed is a swing high. This is a swing high. Let's say you want to think a swing trade. This is a current running trade. This is a current running market now. Let's say you want to take a buy on this trade. Let's say you take a buy here now because you have seen a breakout here. This is one of my strategy, but it is not well confirmed for a buy trend to occur. As you already seen a breakout, let's say okay, you want to take a trade here, you take a buy trade from here, and you want to hold it as a swing trade. Let's say your take profits will want to be somewhere like at this swing high. This is one perfect way you should set your take profit for swing traders. Okay, this swing high and swing low helps swing traders a lot for taking their profits and for executing their trades as well. You take a buy at this point, let's say your stop loss is below this point, and then price even before the swing high, you should put your take profit. Take profit should be somewhere like here. So where the price want to react, where are you likely to see price reaction? It should be somewhere like at this point. At this point, you should be seeing some reaction of price. Most times, why should you put your take profit stop loss at swing high and swing low? It's simply because price might get there and reverse back, and before it gets to your favor, you might have been taken out of the market already. So let's check other markets. Okay, are you seeing this? Are you seeing this current market now? This is a swing low. This one here is a swing low. Let me bring out my brush. Um, this is a swing low here. The one downward there, this is a swing low. This is a swing low. Are you seeing it currently? This is a swing low. Price gets here and bounce back. Let's say you take a buy at this point. Let's say you take a buy at this point. Where should be your take profit? Take profit should be even before this swing high. Your take profit should be somewhere like here. Somewhere like here. Are you seeing even before price get to the top here? Are you seeing how price was reacting here? Are you seeing how the reaction of price? So we don't know if this point we bring price back downward. So we want to always be safe in the market. We take a trade via a buy trade. We better take profit even before the swing high, very close to the swing high. So when price gets there, if it want to reverse back, it's none of our business. We already out of the market. Are you seeing how price got? Let me take this this strategy. Are you seeing how price got to this swing high here and it did some kind of retracement. It did some kind of consolidation. It consolidated, then price break above this point. Are you seeing how it has broken above this point? So we don't want to be in the market where we are not sure of the price movement. So we just want to go in and go out at perfect positions and perfect entry. Are you seeing? Let's say you take a buy here. This even before here, you should be out of the market. Swing high and swing low. For example, this is a swing high here. Okay, let's go look for a set scenario. Let's look for a set scenario now. Okay, great one here. Let's say at this point, this market was selling down, then you see how it traces back. Then let's say you take a sell at, okay, it drags back, moves up again. Let's say you take a sell at this point now. So you want to go out of the market even before price gets to this swing low here. Are you seeing even before price gets to this swing low? Let's say you sold at this point, your take profit should be very close to the swing low. You should exit your trade very close to the swing low. Are you seeing how price got here? Let's say you are still holding this trade. Are you seeing how price massively and rapidly drags back upward? So swing high and swing low are best points also for you to also exit your trade. Always watch out for them whenever you're on your trade. Swing high and swing low, very important. There are key notes, there are key resistance, support, and there are key zones where you should exit your trades. Okay, hello guys. Okay, the next one, the next uh this point you should use as a professional trader. It is when what? It is when your setup is invalidated, when your setup is no more accurate, when you can't find your setup again. Let's say for example you are using a support and resistance. So let's say you are using a trend line. Are you seeing this first touch, second touch, and third touch? Let's say you take a buy at this third touch and you are expecting price to get back to this point here for your take profit. Then are you seeing how the market reacted after going above here? The market drags down. Are you seeing it? The market drags down and it started playing with the trend line here. Started dragging, started playing. This should be your exit point. Any profit you see, you should just go out of this trade. Whenever your setup is invalidated, whenever your strategy you are using for a particular trade is invalidated, LDO rules have been broken, the best time to go out, it is that time when everything has been invalidated. You don't have to wait to see any points. You don't have to wait to see if it will respect your strategy again. When your setup is invalidated, don't waste time in the market. Just cut off your trade. Because the more you wait, the more your psychology is being messed up. And your psychology, when your psychology is being messed up, that is just the beginning of your doom. That is the best point. For example, now are you seeing this trade? Are you seeing this? Okay, let me zoom in. Let me zoom in. Are you seeing currently? Are you seeing this? Are you seeing the support and resistance? How price was moving up, down, up, down. This was a bounce. This is a bounce. How it was bouncing up and down before it finally got up here. And then we saw this massive candle here. If your setup is invalidated, there's no need for you to keep holding a trade. It is very, very wrong. It is not advisable, and I will never do that. Whenever my setup is invalidated, I always go out of the trade. So the moment you begin to adopt this character, it will help you a lot. And then the last point or the last pattern to exit a trade or the last zone to exit a trade, it is what? I'm laughing because you know why? It is margin call. It's funny, right? Yeah, magical is the next point to take a trade. So when you refuse to hear all these instructions I've given you, when you refuse to follow all these instructions, when you refuse to go out of the trade at support and resistance, when you refuse to go out of trade at trailing stop loss, when you refuse to go out and swing high and swing low, when you refuse to go out when your setup has been invalidated, the next point is margin call. Margin call is very, very simple. Margin call, it is when your money has been exhausted, when your money has been eaten by the market, when you don't have a single penny in the market again, and then what? Your broker will close your trade automatically. Simply meaning what? You don't have any money again. So they have automatically closed your trade. It has hit margin call. Your account is now 0 0. Okay, so that is what it simply means. So for you not to experience that, for you not to experience margin call, just follow the simple step I gave you. Okay, so if you find this interesting, don't forget to subscribe. Hit the subscribe button now and turn on the notification bell and share this video with your friend. For more useful video will be coming in for traders. So remain blessed for now. Don't forget to subscribe, and share. It will go a long way to help us. So bye for now.